वो अपना मेन स्क्रीन ले आना. Hello everyone, welcome back to the channel of UL classes. So today we will be taking up the 5th live session on amalgamation. Now in the last 4 sessions, we have already covered with all the major accounting things. We have studied with methods to find purchase consideration and also taken up its questions. We have studied with accounting in the books of transferer company and solved its practical question. Now the last aspect remaining is accounting in the books of transferee company. In yesterday's live session, I explained you the two methods of accounting. One is pooling of interest method and second is purchase method of accounting. So both the methods we already studied yesterday. Now today we will take up with the practical question based on these two methods. See, what I am taking up right now is a question asked in MS University paper set itself. First, I'll take up with the question on pooling of interest method. I also discussed in yesterday's session how to differentiate whether a question is on merger or purchase. Because very first in any question, you have to identify is it merger or purchase. If it is merger, then we will follow pooling of interest method of accounting. And if it is purchase, then we will follow purchase method of accounting. So I am taking up with February 2023 question number 2, which we had already solved in live session 2. But we solved it in the books of transferer companies. Now today same question will solve in the books of transferee company. Let's start with the session. All the students of TY BCom ensure that you have a notebook, pen, paper, pencil, scale, etc. so that you can make the formats, rough formats very fast along with me and start solving it. Now see the question. The following are the balance sheet of X Limited and Y Limited as on 31/3/2022. Equity shares of 10 each, 17,50,000 and 8 lakhs. Security premium, general reserve, capital reserve, profit and loss account, 8% debentures and creditors. And in assets, we have land and building, plant and machinery, furniture, stock, debtors, and cash at bank. Now, on 1/4/22, X Limited and Y Limited agreed to amalgamate and form a new company XY Limited on following terms. So this we have discussed in earlier session also, that X Limited and Y Limited are here the transferor companies. They are going into liquidation. XY Limited over here is a transferee company, buying company. Now today we will be understanding the entries in the books of XY Limited, which is a transferee company. The consideration is agreed at rupees 20 lakhs and rupees 10 lakhs for X Limited and Y Limited respectively. So 20 lakhs is the purchase consideration for X Limited and 10 lakhs is the purchase consideration for Y Limited. The entire amount being payable by XY Limited in the form of its fully paid equity shares of 10 each. Now, if you all remember yesterday I discussed one of the conditions of merger was entire purchase consideration should be settled in the form of equity shares only. Entire purchase consideration should be settled in the form of equity shares only. So here it is mentioned that the entire amount is payable by XY Limited in the form of its fully paid equity shares of rupees 10 each. This indicates that one of the conditions of merger is being satisfied. Okay, so we are hedging towards pooling of interest method because of this. We'll see at the end other conditions are also satisfied or not. The debentures of Y Limited will be issued equivalent value. Now this again, equivalent value of 10% debentures in XY Limited. Now one more condition of merger. First condition was all the assets and liabilities must be taken over. Second condition, at book value. Now here debentures are taken over and they are issued equivalent value of 10% debentures in XY Limited. That means they are taken at book value only. So even that condition of merger is being satisfied. And expenses on amalgamation amounting to 17,500 was borne by, which are borne by XY Limited. Now In the second live session, I discussed because these expenses are borne by XY Limited, accounting will be done only in the books of XY Limited and not in the books of transferor companies. So this entry we have studied yesterday, same will be covered over here. Pass necessary journal entries in the books of XY Limited. Now this is the actual question asked in exam. Means in exam, this question was asked from the point of view of transferee company only. And at the end, you are also asked to prepare the opening balance sheet. Means balance sheet of the new company XY Limited. Now, let us first identify is it merger or purchase, because if it is merger in the books of XY Limited, then we will have to do pooling of interest method. If it is purchase, then we'll have to do purchase method of accounting. If you see yesterday's session, I discussed the conditions of merger and purchase with you. What is the first condition of merger? All the assets and liabilities will be taken over. Second, at book value. And payment must be made to equity shareholders in the form of equity shares only. Exception, fractional amount may be paid in cash. Let's go back to this question, what we are doing today. Now here you all can see, are all assets and liabilities of XY Limited taken over X and Y Limited? Yes. Why? Because of this language. X Limited and Y Limited agreed to form a new company. Means all assets and liabilities of X Limited will become now asset and liability of XY Limited. And in the same manner, all assets and liabilities of Y Limited will also become assets and liabilities of XY Limited. So basically, this sentence indicates that all assets and liabilities are taken over. Now, if you see the three adjustments, do you find that any different value for land and building, plant and machinery, furniture, stock is given in the question? That land and building is taken at a different value? No. That means second condition of merger is also satisfied. All these assets and liabilities are taken at book values. All these assets and liabilities are taken at book values. And third condition is satisfied in this first paragraph, first adjustment, that entire amount is payable in the form of equity shares only. So this satisfies the second condition. Third condition also, that entire consideration is payable in the form of equity shares only. All the three conditions of merger are satisfied. So here we will be passing the journal entries in the books of XY Limited following which method of accounting? Pooling of interest method of accounting. First we'll pass the journal entries, then we'll make the balance sheet. So all of you TY BCom students, those who are present over here, make a format. Rough journal format will also do as of now. Take 5-10 seconds and make format. Journal entries in the books of XY Limited. Take some time and make it fast. Yesterday we studied that total 6-7 entries are to be passed, and first 3 are, I told you, compulsory. First 3 entries would be passed in each and every question, okay, whether mentioned or not, anything specific. And 4, 5, 6, 7 entries are based depending on the specific language given in the question. So 4, 5, 6, 7 entries will come only if that language is specifically mentioned in the question. I hope you all are done with the formats. Let's start with the entries now. Now, first entry in the books of transferee company is business comes in. Yesterday we did that. Debit what comes in. So business purchase account debit. Okay, business comes in, debit what comes in, business purchase account debit. And the amount is payable to the liquidator of transferor companies. Here there are two transferor companies, X Limited as well as Y Limited. So credit the payables, amount is payable, credit the payable to liquidator of X Limited account, and same way to liquidator of Y Limited account. So amount is payable, credit the payable, and amount is payable to whom? Liquidator. So to liquidator of X Limited account, to liquidator of Y Limited account. Now see here in the first adjustment, all of you, 20 lakhs is payable as consideration to X Limited, 10 lakhs is payable as consideration to Y Limited. So this liquidator of X Limited will come with the amount of 20 lakhs, and liquidator of Y Limited will come with the amount of 10 lakhs. And total business purchase account we will debit with the amount of 30 lakhs. So this is the first entry to be passed in the books of transferee company. Business purchase account debit with the total purchase consideration of 30 lakhs. To liquidator of X Limited with 20 lakhs and to liquidator of Y Limited with 10 lakhs. Okay. Now second entry is to be passed for taking over assets and liabilities. So we studied this entry in the last session yesterday. Assets comes in, debit what comes in, assets account debit. Liabilities become payable for us, credit the payable to liabilities account and to business purchase account. Business purchase account we will close. Okay, with the amount of purchase consideration. And we discussed yesterday, if you all see over here, that this part is important. Difference between share capital and purchase consideration is to be adjusted with the amount of reserves and surplus. First, let us do this before passing the entry in this question. Now here if you see, then for the second entry, I am showing it over here. What is the amount of purchase consideration agreed? 20 lakhs plus 10 lakhs, 30 lakhs. Okay. And against that, what is the share capital of X Limited and Y Limited? See here. 17 lakh 50,000 is the share capital of X Limited. 8 lakhs is the share capital of Y Limited. Means share capital amount is 17 lakh 50,000 plus 8 lakhs, 25 lakh 50,000. Now purchase consideration 30 lakhs. Share capital we are getting only 25 lakh 50,000. So we are paying more. How much more we are paying? 4 lakh 50,000. This is our loss. From XY Limited point of view, it is paying 30 lakh rupees to the shareholders who have stake in X Limited and Y Limited only for 25 lakh 50,000. So there is a loss of 4 lakh 50,000. Now this loss I discussed in the last session will be adjusted with, see here, this loss we discussed, it is to be adjusted with what? Reserves and surplus. Can you all see here? That is what we are going to do right now. If you see in this, what are the reserves and surplus? This ones. Security premium 1,57,000, general reserve 6 lakhs, capital reserve 18,000, profit and loss account 2,50,000. With these reserves and surplus, we have to adjust the loss of what amount? Loss is 4,50,000 only. So what can we do? 4,50,000 of entire loss we can adjust with general reserve itself. Why to utilize security premium P&L separately? That is what we will do. Any one reserve or all the options are correct. If you adjust 1,50,000, 7,000 with security premium and remaining amount of loss, which is 4,50,000 minus 1,57,000, you take from general reserve, then also it is correct. You take 1,57,000 from security premium, 18,000 from capital reserve, 2,50,000 from P&L account, remaining amount of general reserve, that is also correct. All options are correct. Okay. We will go with the simplest one. Entire 4,50,000 we will adjust with the amount of general reserve. Okay, the simplest option. This loss of 4,50,000 we will adjust with general reserve. So what is the amount of general reserve in the balance sheet? 6 lakhs minus will adjust the loss of 4,50,000. How much remaining amount of general reserve will be recorded in our books? 1,50,000. Means this journal entry what we pass, assets account debit to liabilities. I told you liabilities will include reserves also. See here, in yesterday's session I told you that in this journal entry over here you all can see liabilities will include reserves and surplus also. In this entry when we include reserves and surplus, general reserve we will include only with the amount of 1,50,000 after adjusting that loss. So now we go ahead and pass that entry. Second entry. Okay. Assets account debit. In assets you all can see we have land and building account debit with 2,97,000. Then next asset is plant and machinery account debit with 12,50,000 plus 5 lakhs. In the new company, both companies' assets will come. So total amount has to be recorded. That is why it is called merger. Okay, you are merging the two balance sheets and making one. So in the new company, XY Limited company, now plant and machinery will be 1250 plus 5 lakhs, 17,50,000. Okay. So plant and machinery account debit with 17,50,000. Then next asset is furniture. Again, 1,60,000 plus 1,22,000 you all can see here. Okay, furniture will be with 1,60,000 plus 1,22,000, so 2,82,000. Furniture account debit 2,82,000. Then next, after furniture, what do we have? Stock. Stock we have 8,50,000 plus 3,31,000. So stock will be with 8,50,000 plus 3,31,000, that is 11,50,000, 12,00,000, 11,81,000. Okay, 8,50,000 plus 3,31,000, that will be equal to 11,81,000. Stock account debit 11,81,000. Then after stock we have debtors. Debtors are 3,50,000 plus 1,70,000, so 5,20,000. Okay, debtors will be with 5,20,000. Debtors account debit 5,20,000. Then after debtors we have cash at bank. I told you when they are merging, even cash and bank will be included. So 1,50,000 plus 1 lakh, 2,50,000. Cash and bank account we will debit with 2,50,000. Cash and bank account debit with 2,50,000. And to liabilities account. Now in liabilities, what all we have here, you all can see debentures we have with 2,75,000 in the liability, 8% debentures. So to 8% debentures, 2,75,000 to 8% debentures account, 2,75,000. Then we have creditors, to creditors account with, now here again we'll add the amount, 3 lakhs plus 1,30,000, 4,30,000. Okay, creditors will come with 4,30,000. And liabilities will include reserves also. So if we go with the reserves, then security premium 1,57,000 entirely. But general reserve, as we discussed over here, general reserve will be with 1,50,000. Okay, so one by one we record them. First, security premium with 1,57,000. Then to general reserve with 6 lakh rupees. No, not 6 lakhs, as we discussed, 1,50,000. Okay, after adjusting the loss, general reserve with 1,50,000. Then capital reserve 18,000. And then lastly, profit and loss account with 2,50,000. To profit and loss account with 2,50,000. Okay. Alternatively, if you would have adjusted the amount of loss with security premium, capital reserve and P&L account, then also it is okay, and then only general reserve would get credited in the books. The total amount of all these reserves would remain same. And then lastly, so assets account debit is done, liabilities account credit is done. Lastly, we will have to do to business purchase account. That will be with the amount of purchase consideration 30 lakhs. So this entry is very important in the books, whether you go in by pooling of interest method or you go in by purchase method of accounting. This entry is very important. Assets account debit, to liabilities account, to business purchase. And how to adjust the amount of reserves we have seen in this method. Okay. Now, all of you can later on cross verify. Debit amounts will be equal to the credit amounts. Okay, whatever total accounts and amounts we have debited, that will be equal to the total amounts what we have credited. Now third entry is for the payment of purchase consideration. So what will be the entry for that? Liquidator, these accounts we have to close. Liquidator is the receiver, debit the receiver. So liquidator of X Limited we will debit with 20 lakhs. Again, liquidator of Y Limited is the receiver, debit the receiver. Liquidator of Y Limited will debit and close with 10 lakhs. And entire amount is paid in the form of equity shares only at par. So to equity share capital account with the amount of 30 lakhs. Okay. So that particular entry will be now. Liquidator is the receiver, debit the receiver. Liquidator of X Limited account debit with the amount of 20 lakhs. Again, liquidator of Y Limited is the receiver, debit the receiver. Liquidator of Y Limited account debit with 10 lakhs. And equity shares goes out, credit what goes out to equity share capital account with the total amount of 30 lakhs. So I discussed with you that these three entries are compulsory. They will come in each and every question. 4, 5, 6, 7 will come depending on the specific language given in the question. Now over here, if you see, fourth entry we studied yesterday is for issue of shares. Now in this question, what we did right now, no shares are issued in the public. No shares are issued in the public. So this entry will not come. Fifth entry is for amalgamation or liquidation expenses, and that we have seen. Again, we have to adjust that amount with reserves on P&L to cash and bank. Now here we do have them. Okay, all of you can see in adjustment number 3 over here. How much are amalgamation expenses? 17,500. This we will adjust with the amount of reserves. Now see here, which all reserves are there? There is security premium, there is general reserve, there is capital reserve, there is P&L. Since we adjusted these amount with general reserve, let us adjust this expense of 17,500 also from the amount of this general reserve itself, 1,50,000. Is 1,50,000 sufficient to bear the expenses of 17,500 or not? Yes. So entry over here will be, since we utilize general reserve for that, general reserve account debit with 17,500 to cash and bank account 17,500. Okay, so this is for amalgamation expenses. And then lastly, in yesterday's session we studied which other entries are there after that, payment of liabilities. Now here, if you all remember, I told you that generally debentures will be given debentures, and that entry will only come in case of liabilities. Exactly same situation we have in this question. Look at adjustment number 2. Debentures of Y Limited will be issued equivalent value of 10% debentures of XY Limited. Okay, so debentures, but what is the difference? This 8% debentures are given 10% debentures. So what we will do is, these 8% debentures account, we will reverse and debit and close them. So entry will be %8 debentures account debit. Okay, what amount? 2,75,000. Debentures account we will close with 2,75,000. And to what are we giving them? 10% debentures. So to 10% debentures account, equivalent value at par, so 2,75,000. Okay, 8% debentures account debit to 10% debentures account, 2,75,000. And then last entry we studied was for other preliminary expenses, etc., which we don't have in this question. So basically these entries are only to be passed. I hope everyone is clear with this. Total 5 entries are there only in the books, 3 are compulsory, and 4th and 5th entry is there depending on the information given in the question. Now, other than journal entries, what you are asked in this particular chapter is, in this particular question is, prepare opening balance sheet. So how to prepare opening balance sheet? Let us see. Balance sheet of XY Limited. Now see, this is the ready-made format I've already made over here. You'll have to make it. So again, rough format, you all can make it later on. But balance sheet will include equity and liability side and asset side, and below that we have to make the notes. So first we'll have to make the notes, then we'll have to make the balance sheet. Now what is the order of notes to be followed when we make the balance sheet? Very first note is always for share capital. Here I have included only those notes which are there in the question. And in exams also you are supposed to do that only. If any item of balance sheet is not there in your balance sheet, no need to make that particular note. So share capital, authorized capital, issued, subscribed and paid up capital. Now how to make this balance sheet? Important point, everyone, come on. Balance sheet will be made from journal entries. This entire balance sheet will be made only from journal entries. So if I talk about share capital, then see here in the journal entries, can you all see that there is a share capital of 30 lakh rupees in 10 rupees shares? So 30 lakhs divided by 10. 30 lakhs divided by 10, 3 lakh shares will be there. That is what we have to mention in the notes. What is issued, subscribed and paid up capital? 3 lakh equity shares of rupees 10 each. 3 lakh equity shares of rupees 10 each. So that will be equal to 30 lakhs. Okay, total also 30 lakhs. Now second note is reserves and surplus. What did I tell you? This also entire balance sheet will come from journal entry only. See your journal entries. Security premium will come with 1,57,000. General reserve will come with 1,50,000 minus 17,500 that we have utilized in paying for expenses. Then capital reserve will come with 18,000. Profit and loss account will come with 2,50,000. All these items will come in reserves and surplus. Let's record them one by one. Very first, security premium 1,57,000. Then general reserve 1,50,000 minus 17,500. Okay, so 1,32,500. Then after general reserve, what do we have in the journal entry? Capital reserve 18,000. And then profit and loss account 2,50,000. And outer column, the total will come to how much? In fact, all these can be recorded in outer column rather. Only if any adjustment is there, then we write it in the inner column. It's okay. Total will come to 1 lakh, 2 lakh, 4 lakhs, 4 lakh 50, 5, 530, 540, 557. Okay, 1 lakh, 2 lakh, 4 lakhs, 450, 480, 540, 557. Yes. Now long-term borrowings. What will long-term borrowing include? From the journal entries, debentures. Now these debentures account, 8% debentures are already closed over here in the last entry. Now in the new company, Against 8% debentures, what we have given is 10% debentures of 2,75,000. So these new debentures will come in the balance sheet. So long-term borrowings will include 10% debentures. Now in the new company's balance sheet, instead of 8% debentures, we will have 10% debentures with the amount of 2,75,000. Then trade payables, creditors that we already have. See in the journal entry, creditors is what amount? Over here, second entry, creditors are 4,30,000. So creditors will come with 4,30,000. Okay, liability side is done. Now asset side, tangible fixed assets. You can see in the journal entry, see we are not writing those items which are not there in the question, meaning to say, if you see our balance sheet, we don't have other non-current liabilities, long-term provisions, short-term borrowings, other current liabilities, short-term provisions. These items we need not write in the notes. And even the main balance sheet format, if you don't write these things, it is okay in exams, because time will always be short from accounts point of view. Okay. Now going further, in asset side, what we have is tangible fixed assets. Now tangible fixed assets in the journal entry are so many, all of you can see. What all will come in tangible fixed assets? Land and building 2,97,000, plant and machinery 17,50,000, furniture 2,82,000. All these three will be part of tangible fixed assets. So first, land and building 2,97,000. Then plant and machinery, what is plant and machinery's amount in the journal entry? 17,50,000. Okay, plant and machinery is 17,50,000. Then furniture, what is furniture's amount? 2,82,000. These three are tangible fixed assets. 2,82,000. Total of these three will come to 17 plus 2, 19 plus 2, 21, 21, 80, 22, 30, 23, 29. Okay, total of these three, 17, 19, 21. 21, 22, 70, 23, 29. Barabar. Okay, then inventories. Now inventories will include stock. From the journal entries, we can directly see that stock is 11,81,000. Okay, from the journal entries, we can see directly stock is 11,81,000. So stock of 11,81,000. That itself is the total. Trade receivables will include debtors. Now again, from the journal entry, we all can see that debtors are 5,20,000. All of you can see here. Okay, debtors are 5,20,000. Again, only one item in trade receivables. Then cash and cash equivalents, total cash and bank account. Now over here again, you can see in the journal entries, cash and bank is 2,50,000, but from that we have paid this expenses of 17,500. Okay, so 17,500 cash goes out from 2,50,000. Remaining will only appear in the balance sheet. So 2,50,000 minus 17,500. 2,50,000 minus 17,500. So 2,32,500 will be the amount of cash and bank. Again, only one amount. So all the items from journal entry we have taken in the balance sheet in consideration. Okay. Otherwise, business purchase account gets closed, liquidator account gets closed, land and building, plant and machinery, furniture, stock, debtors, cash and bank and have come in the balance sheet. 8% debentures get closed. Creditors have come in the balance sheet. Security premium, general reserve, capital reserve, P&L has come in the balance sheet. Business purchase gets closed. Liquidators get closed. Equity share capital has come in the balance sheet. General reserve is adjusted. Cash and bank is adjusted. 8% debentures is closed. 10% debentures has come in the balance sheet. So from entire journal entry, we have made this new balance sheet. Now these amounts will put in the final balance sheet. So share capital is 30 lakhs. Then reserves and surplus is how much? Total of 5,57,000. All of you can see here. Reserves and surplus total is 5,57,000. Total 35,57,000. Just one moment. Yeah, 35,57,000. Now, long-term borrowings includes debentures. So directly in outer column, we can record the debentures. Debentures are 2,75,000. Okay, all of you can see here in the last long-term borrowings, we have written them. Okay, long-term borrowings include debentures of 2,75,000. Then trade payables are 4,30,000. So in current liability also, we have only one item, trade payables, and that is 4,30,000. So total will come to how much? 35 plus 2, 37 plus 4, 41 plus 1, 42, 42, 50, 42, 62. Okay, 35, 37, 41, 42, 42, 50, 42, 62. 42,62,000 are the total liabilities. Now in assets also, see these things we don't have, so we'll not write. Intangible, non-current assets, these things we don't have. Then current investments we don't have. Short-term loans and advances and other current assets we don't have. In exams also, if these items are not there, you may not write it even in the balance sheet. Now, fixed assets, tangible. See what is tangible fixed assets total over here? 23,29,000. Okay. Only one is there, so directly I record in the outer column tangible fixed assets 23,29,000. Then here we have more than one item, so we'll write in the inner column inventories. Now inventories you all can see here are 11,81,000. Okay, inventories are 11,81,000. Then trade receivables debtors are 5,20,000. Okay, so 5,20,000 of trade receivables. And cash equivalents, all of you can see lastly they are 2,32,500. Cash and cash equivalents 2,32,500. Now total will come to 11 plus 5, 16, 16 plus 2, 18, 18 and 1, 19, 19,33,500. Okay, 19,33,500. And final total 23,29,000 plus 19,33,500 will come to 20, 30, 33, 42, 42, 62. I think in 500 there is some difference. This amount 5,57,000 would be here 500. I forgot to include 5,57,500. So in reserves and surplus, we'll make the correction. We'll make it 5,57,500. Okay, 5,57,500. Total also 35,57,500, and this also 42,62,500. And here also it's coming to now 42,62,500. So balance sheet gets tallied. Okay. So friends, this is how we have to do the accounting in the books of transferee company by pooling of interest method. Okay, this was the recent most question asked in your exams. I hope the sessions taken for amalgamation, 5 sessions, will help you a lot. In 5 sessions, we have tried to cover majority all the aspects. Wish you all a very best of luck for your upcoming exams, and stay tuned to You Will classes for more and more help academically from our side. Bye everyone. Take care.